just stick around up the end of this video. You'll be able to get something today. So now remember, we always trade gold, XAU, USD. Okay, so we always scalp gold when we are scalping. We always trade only that pair because it is kinda volatile. But also you can trade GBP USD, you can trade Euro USD. So now this one, always I told you, we must do what? We must always look at the market structure. Okay, the market bias. Where is the market trading? Is it bullish? Is it bearish? Or it is in the range? So that one will help us at least to know where to place our trades, or where to draw our order blocks, where to find fair value gaps, provided they are in accordance with the market direction. Okay, so now this is 4-hour time frame gold. Okay, so now if you see here, it was actually an uptrend. It was breaking highs. Okay, see here, it was breaking high. This was the high that actually was broken. Okay, so now this is a higher low, this is a higher high. It made a higher high right here. Actually here it did not break, though it came back here and it broke this high, means it made a new high, as you can see there. Then you see right here, okay, then it went up. Now you can see this. Okay, so now it is kinda ranging right there if you really reach there. Okay, so now you can see, guys, okay, you can see this, right? You can see that it was breaking some highs, means we were kind of bullish. Okay, so now let's look for some zones that we really traded in. Okay, so now let's see some zones that we traded in. We were waiting. Okay, so now as you can see, when the market came here, when actually the market came here, it didn't break this high. Okay, it didn't break that high. It rather firstly retraced back. Okay, it first retraced back. So on retracing, you have to always be knowing where you are going to wait for the market, where you want the market to come and tap. Okay, so now that's why we waited for our market right here. Okay, we waited for our market right here on this order block. Okay, so now after that, also there were fair value gaps actually down here, though the market didn't reach there. It just turned through our order block. Okay, so now that's the best thing you can always do. Always you can also go to your lower time frame for entry. Okay, remember that is a 4-hour time frame, but when the market taps in your 4-hour time frame, you should always get to the lower time frame for entry, right, guys? So now you can see this is where the market tapped. Okay, so now it just made this this fake buy. Okay, it just bought before actually tapping in our order block. It just trapped some early buyers right here. Okay, after trapping them, now here someone would just enter after taking out this low the market had made. This is what we call entering using liquidity. Okay, this those ones who enter using liquidity, actually here they gained some pips. Okay, so now we were waiting for the tap or for the takeout of that low that the market had made. Okay, so now after that, after actually the market coming and closing closing above that low, that's why most of us that trade liquidity, we entered immediately after. Okay, immediately after the market closing above that low. Okay, so as you can see here, it actually also showed us that we are bullish. Okay, so now someone would just enter right there. You can get this high that the market had made, and you put your stop loss right here. It is actually 1 to 4 risk to reward. Okay, so now also someone would just target also here a 1 to 5 or a 1 to 6 right there. Okay, so now and after actually that, let's go back to our 4-hour time frame where we get the zones from, guys. Okay, so now after that, let's see another break of structure and the zone we had to look at. Okay, so now as you can see here, the market just broke a structure from here. Okay, so as you can see, because at first it had failed to break, but now it came and broke this high, right, making a higher high. Now after market making our higher high, of course we have to wait for it to retrace to our zones. Which zones? Fair value gaps and order block. That's the zones we are using, okay, to enter the market. We had a fair value gap right here. Okay, so now, and we had an order block right here. Though the market also, it just turned from our fair value gap, guys. Okay, so now let's go to our lower time frame, like 1 hour, and we see how the market behaved there. Okay, so now you can see after the market tapping in your fair value gap, you can see how the market behaved. Let's go to our 15 minutes. We see more of how this market actually behaved on our 15 minutes. Okay, so now you can see how the market behaved, guys. Okay, so now the market just behaved like this. So now you can see this small structure. If you go to your 5 minute or 1 minute, you'll see, because now it's scalping, that's why we go all along to our lower time frame, guys. Okay, so now you see these small structures that were made here. Okay, so now someone would just enter immediately after making that market structure shift, or most of you call it a change of character, guys. Okay, so now you can see but that this one, all of it is happening in our fair value gap, guys. Okay, so it is all happening in our fair value gap. You can see, guys, how the market has behaved. So let's go back to our 4 hour, and we see another zone here that were retested. Okay, so now after that, you can see that the market just went up. Okay, it made this high, it made that high, that new high. Okay, so now you can see now the market is just ranging, it is ranging above this high. Okay, it is ranging just right here on this order block. It is still ranging, guys. So now most of the traders were selling this because it is in the range. Okay, so now we shall wait for it to break that high, and we see where we can sell this market from, because now you can see here it is generating some trend line liquidity right here. Okay, it is generating some trend line liquidity, and it has broken that trend line, so it might sell. Yeah, it might give us some small sales, guys. You know, we always trade, or we don't have a specific strategy. Actually, we are trading, rather we just trade what the market tells us. Okay, so we just trade market structure, liquidity, fair value gaps, and order block, guys. Okay, so now we shall wait for the market to come there, and we shall sell it. Okay, so now you can see, guys, that's how you can really scalp these trades on gold, because gold is somehow volatile and you get some pips in the market, guys. So hope these small videos helped you guys. Consider subscribing, give a like to this video, share to friends so that all can benefit. Thank you for watching. This is Jimmy Stay safe and good.